Hi guys, this is Rudy for Bester Investor. Today I'm actually wearing my Mr. Oxy cap again, and the reason for that is that I have finally managed to get some content together to share with you as it relates to Occidental's third quarter, which was reported last Monday, November the 9th, and the webinar and conference call was on Tuesday, November the 10th. But today I'm actually featuring the content of a special guest, and his name is Rob Smith. He's from Whangarei in New Zealand. It's probably a place that you have never heard of before, but for someone like me who grew up in South Africa and grew up watching All Black rugby, I can tell you that Whangarei in New Zealand is actually better known for especially one particular reason, and that is it was the home of Wayne Buck Shelton, one of the most famous All Black rugby players ever to don the black jersey for the All Blacks. Thank you very much to Rob Smith for the content that you provided. He did an awesome cash flow analysis, which I'm going to share with you a little later in this presentation. But yeah, thanks for the content and for the collaboration on this presentation, Rob Smith from Whangarei in New Zealand. So the first thing that we want to take a look at here is that Occidental, from a production point of view, is actually producing 1.2 million barrels of oil per day, as most of you by now already know. But if you really take into consideration global consumption, this represents approximately 1.2% of total world demand. So you can see Occidental is a significant player in the global energy market as of today. I did take a look at the balance sheet, and what I want to do here is just highlight a few things for you, and maybe if I can make myself a little smaller and get out of the way just a little, you'll see that the numbers in blue over here represent the third quarter, up until the third quarter, so September 30th, 2020, and then we look at December 31, 2019 as a comparison. You can see that the cash and equivalents are down to about 2 billion. It was 3 billion at the end of last year. But then on the positive side, at the end of Q2, Occidental only had approximately $1 billion in cash and equivalents. And during the past quarter, they've settled some debts and they've paid the Warren Buffett coupon in cash, and they exited the quarter with $2 billion. Obviously, also on the strength of a much stronger price for oil per barrel than in Q2. The trade receivables has gone down quite a bit, and some of it is obviously also embedded in the cash on hand, because obviously as trade receivables come in, they move from this column to the cash column. So in total, then you can see that the total current asset value at the end of the quarter is approximately 10.6 billion. We know from looking at the balance sheet that the total current liabilities, which means the liabilities that will come due in the next 12 months or so, is approximately 10.5 billion. So that particular line item there is a wash, with Oxy having enough current assets, cash and cash equivalents on hand in order to settle their liabilities basically on a one-to-one basis. You can see there's a $10 billion uptick or downtick, if you will, on depreciation, amortization, etc. This is more a tax entry than anything else, because obviously it doesn't impact your cash on your income statement or your P&L. But there's a $10 billion write down here, which also impacts the bottom line, which now comes in at 84 billion in total assets compared to 109 billion for which was the total when Oxy exited 2019 at the end of December. So Rob drew my attention. We were talking about assets, and I know some of the people, including one of our followers in the community, Bulldog, had mentioned, Oxy's assets could be overvalued on paper. And Rob reminded me that Oxy has a massive chemicals business. In fact, Oxy, just in case you didn't know, is the largest caustic soda, caustic potash, calcium chloride manufacturer in the world, the largest manufacturer of sodium chloride in the world, in the United States, the second largest potassium hydroxide and chlorine manufacturer in the world. A couple of facilities right across the United States, Canada, Chile. And without these, Rob said, life as we know it would not be possible. I happen to agree with Rob, so thanks for highlighting those for us. But we're not done yet, because Oxy has more amazing assets outside of just the regular things that you think about when you think of Oxy as one of the world's major oil and gas producers. Other additional interesting assets include a 550 million kilogram per year ethylene cracker plant. And if you didn't know what a cracker plant is, I looked it up, and the definition is it's a chemical reaction of cracking gas molecules into building blocks of plastic, which is obviously used in almost anything we can think of today. Oxy also has a 1,200 megawatt power generation facility from three separate plants and a 25% stake in a massive gas pipeline in the Middle East. So thanks, Rob, for that reminder. Furthermore, looking at the balance sheet again, I just remarked on this a minute ago. Total current liabilities, 10.5 billion. Current liabilities, by definition, means liabilities that are going to be due within the next 12 months. And if we look at the long-term debt and deferred credits and other liabilities, you can see this has been reduced from 21.7 billion to 18, so approximately a $3.6 billion reduction in total deferred credits and other liabilities. So Oxy is absolutely on the right path. Stockholders' equity. The reason why I put these gold arrows here is because I'm just looking for anomalies. I'm looking for things that are significantly different to what they were, for instance, in the previous year. Retained earnings at the end of 2019 was 20 billion. Now it's only 4 billion. If you keep making a loss, you keep producing or wiping out your retained earnings. So we would expect to see a turnaround in retained earnings. Maybe if I can go out on a limb here, I'll say, depending on the price of WTI, if we get into 50, 60 dollars per barrel, the retained earnings and retained or losses per quarter can quickly flip into profit. And then the total stockholders' equity commensurate with the drop in retained earnings has gone down from 34 billion to about 20 billion, so about a 14 billion drop in total shareholder equity. However, remember, and I showed this in a previous video, the total stockholders' equity or shareholder equity or owner's equity, or however you want to phrase it, is about $20 billion. And still today, even though Oxy's stock price has been on a bit of a tear lately, the market still only values Oxy at about $11 billion in total. And as I just shared with you in the previous slides, Occidental's assets are way, way worth more than just that. We look at revenues and other income, and as promised, I'm going to get into cash flow in just a minute, and I'm actually going to give you a breakdown of Rob's calculations that he did, which is awesome. But we can see net sales for the quarter, the 3 months, $4.1 billion. If we look at the total 9 months at the end of September, 12.9, so almost $13 billion in revenue and total income. Not a bad picture by a company that supposedly is struggling. We can look at chemical and midstream cost of sales over here, 1.8 billion. You can compare it to the previous year. It was about $2 billion. So there's some sort of anomalies here. You can look at all three of these figures there. There's actually transportation and gathering expense. The costs there went up from only 285 million by almost 1 billion to $1.275 billion. Over here, you can see another huge change. 325 million was written off as asset impairments as at the end of December last year. Sorry, for the 9 months ending September 30th last year. That was obviously just after the acquisition of Anadarko. And so far, for the 9 months this year, it is $11 billion. So they've been writing off some assets. And obviously, if you've been following, you will know that's a significant chunk of change. Another couple of things, just some highlights here that I want to share with you. We can look at the income tax benefits and the income or loss, in this case, from operations before income taxes. You can see there's quite a change here over the reporting period. And then, of course, the net income loss from 752 million to 3.6 billion. More about that in just a minute when I get into Rob's cash flow analysis and we go a little bit deeper into this. Last slide on this particular topic here, the consolidated statements of comprehensive income or loss. At the end of 9 months, September 30th, 2019, $312 million positive. And then for the 3 months that we're looking at here for September 30th, negative 3.5 billion. But last year at September 30th, it was only 942 million. So quite some dramatic changes in terms of Occidental's performance, especially over the last 6 months, as the coronavirus pandemic almost just demolished demand for oil and gas in general. So I did promise I'm going to get into Rob's cash flow analysis, and I'm going to share some of the highlights reel here with you. Really interesting stuff. And once again, thank you, Rob. This is just awesome. He mentions cash flow from operations, 1.6 billion for the quarter. And then you're going to have to follow with me here. And then if you want, you can always cross-check it with the SEC filings on Occidental's website. But he says, so this is Rob's calculations, not mine. 1.6 billion cash flow for the quarter. They spent 246 million on capital expenses, and working capital decreased by 829 million. This 829 million in working capital, they are not accounting for. So they're taking the 1.6 billion, subtracting the 246 million, and calling it $1.4 billion free cash flow. By now, if you've been following Occidental, and if you were an investor in Occidental, you would obviously recognize the number of 1.4 billion for free cash flow, which Vicky on the conference call said is the most cash flow they've generated since 2011. They have interest payments outstanding of about 350 million per quarter, which excludes the $200 million payable to Berkshire Hathaway under their coupon. So if we subtract the $350 million from the $1.6 billion that Rob started with, and he goes into a little bit of detail here. If you want to follow on these slides, you can always pause the slide so you can read the entire slide when you're watching the video. But effectively, the bottom line is you have $1.6 billion less the 350, which is the interest payments outstanding, plus about $100 million here where we're talking about the inventory build, which leaves you approximately $1.4 billion. From that $1.4 billion, Rob says we should subtract the capital expenses, and Occidental reported 246 million. Light as that is, it's nowhere near enough to sustain production, and this is really what they spent, but it's no reflection of what needs to be spent for our business to survive. They are going to spend $2.5 billion this year. We know that because that's their projection, and that's what Vicky and the team said on the conference call. And they're projecting $2.9 billion maximum CapEx spend for 2021. If you take $2.5 billion and divide it by 4 for a quarterly spend, then you end up with 769 million. So 769 is the actual free cash flow. If you take out the Berkshire Hathaway dividend of $200 million, you have a true cash flow number of $569 million, or as Rob says, $500 million to be conservative. So let's work with the $500 million to be conservative and see how that pans out. Oxy cleared, therefore, $500 million after all true expenses in 3 months at an average price of $40.93 for WTI per barrel of oil. And this is against a market cap currently of about $11 billion. If Oxy continues at this pace for a year, at this quarter's average WTI price, that would equal $2 billion in real cash annually, which is, I'm sure you would agree, quite incredible. $2 billion actually represents a yield of approximately 18% on our investment, or a PE of only 5.5, which means Occidental is incredibly cheap. Rob added 2 other things. He said 2 things to consider to earn this money. We're using lots of debt, which can kill them, and WTI of $40 plus is needed. But this is the power of leverage. The debt is the best thing in the world at 45 plus, but at less than $35 per barrel, it could be an absolute killer. So let's take a quick look at the long-term debt in terms of where we stand right now. At the end of December 2019, Occidental had long-term debt of $38.5 billion, which is now down to $35.9 billion. Occidental is doing a very good job managing their debt wall. Cash flow analysis. So this is sort of the grand finale for Rob. Is basically saying, guys, an average sustained price under $35 for WTI would cause real damage to our investment. Oxy would be able to survive for a while, but at a cost. They would need to do a whole variety of very interesting things if the price was sustained at under $35 for several quarters in a row. However, if the price for WTI is in the late 30s per barrel of oil, and remember Vicky said on the conference call that that is the approximate break even, she said the high 30s. So if the price for WTI stays in the late 30s per barrel of oil, Oxy will be okay. It can fund itself and just wait for a recovery. However, at sustained WTI prices of over $45 to $50 per barrel of oil equivalent, prepare for liftoff. So on that note, once again, a huge special thanks to Rob for the cash flow breakdown. I really enjoyed reading his breakdown. He sent it to me via email. I asked him if it would be okay for me to use it as I created this presentation related to Occidental's third quarter. He shared additional information with me as well, which I will share with you later on in a future video. Really, really cool stuff. So Rob, you're awesome. Thank you for what you did in terms of breaking down the cash flow for us and for your projections in terms of how we need to think of Oxy at WTI 35 or below, or otherwise 45 or above. So thank you for that. So a quick couple of slides here. I have two slides on liquidity. Occidental has taken significant measures to increase its near and midterm liquidity, reduced the 2020 capital budget to a range of 2.4 to 2.6 billion, made significant cuts to the 2020 operating and corporate costs. That in itself is a cost saving of about $1 billion. Obviously, they reduced the quarterly common stock dividend to a penny a share. As much as I don't like receiving nothing effectively, I would rather they do that than put my investment at risk or in jeopardy. So I'm comfortable with them scrapping the dividend until they arrive at a point where they can actually offer us a sustained ongoing dividend that makes sense for the business. They also elected to pay the preferred stock dividend in after having paid it in shares or common stock. Previously, they paid it in cash during the fourth quarter, which obviously also impacts us from a share dilution point of view as stockholders. One more slide on the liquidity. They sold approximately 4.5 million mineral acres, Wyoming, Colorado, Utah, etc. They issued $5 billion in senior unsecured notes. By now, you've probably become familiar to a degree anyway with the debt note tender offering that they had recently. Repaying $5.2 billion of 2021 maturities and $773 million of 2022 maturities through 2023. What I like about what they've done here is the way in which the management has gone about attacking the wall of debt, even looking forward and ahead into the period 21, 22, 23. They exchanged approximately 27.9 million WES common units to retire a 260 million note payable to WES, which was actually only due in 2038. Obviously, by now you know that they've sold their Colombian assets for a total price of approximately $700 million, and we expect that cash to hit the bank during the fourth quarter. A couple of quick snapshots. So we look at the Occidental financial strength analysis. I'm going to wrap it up on these topics here, and then we take a look at Oxy's snapshot in terms of where it is right now. And then I'm going to gracefully thank you for watching and following me all this way through. The debt to capital ratio right now is 62.25%, and that is in line with the oil, gas, and consumable fuels industry. So don't let any talking heads on TV scare you into selling your Occidental stock. And by talking heads on TV, I specifically am talking about people like Jim Cramer, who is literally telling people to sell Oxy. And this is the same guy who told people not to sell Bear Stearns in 2008. If we look at the Occidental financial strength analysis in comparison to the industry, its total debt is slightly higher than the industry right now, but we know because of the information I just shared with you that they are aggressively attacking that debt. They're changing debt quarter over quarter. You can see it's now dropped below. Oxy is at 0.2%, the industry is 0.29, the quick ratio edging up closer towards 1, and then the interest coverage is negative 7.79 times. A quick snapshot, I took this yesterday. Today is Tuesday, it is November the 17th, so this is as of yesterday. A few minutes ago, I looked at Occidental. It was kind of holding at that price. When I looked at it, it was $12.33. Anyway, if you look at the snapshot of the company, you can see it's trading in a range which is sort of gradually creeping up to the 1250 and beyond mark. It's way off its low that it hit just a short while ago. It's still very volatile at 113% compared to the rest of the market. There's this ridiculously cheap market cap that I talked about a few minutes ago, 11.6 billion as of yesterday. The dividend we discussed, held by institutions, still at 65%, and the short interest is still 5%. For the guys who are short Oxy right now, those 5% of common stockholders, those guys who are short, they are probably right now feeling a little bit vulnerable, as Oxy has been ticking up day after day as we get news about coronavirus vaccines and a gradual return to normal, despite the fact that there are huge spikes in cases of coronavirus. So let's not confuse cases with mortality. It's awful that people are getting sick from the coronavirus, but the more cases there are, the lower the mortality rate actually goes, literally. So, the fact that companies like Pfizer and Moderna are publishing studies with efficacy rates on their vaccine of 90% plus is just great news in terms of life in general, and of course, Occidental specifically. So guys, on that note, I'm going to wrap it up. You can see this red circle at the top here is Morningstar's fair value, close to 24 bucks. Let me know in the comments, as usual, what you think. I look forward to your comments. This is the analyst recommendation as of yesterday. 2 people say buy, 2 people say outperform, 15 are saying hold, 4 underperform, and 2 say sell, sell, sell. One of the 2 that says sell is probably the street, speaking on behalf of Jim Cramer. If you like my videos, please subscribe. It's great if you subscribe, and we can build a community of like-minded investors. I look forward to your comments. As usual, you will know that I will respond to almost all of them, except when you send me hugs and kisses, because then I don't know how to respond. But otherwise, I want you to stay safe, take care, and we'll be back soon with more information. So for now, just take care of yourself, stay safe, and we'll be back soon with more information. Thank you for watching. Take care. Bye-bye.